Welcome to Buy, Hold, Sell. We're talking about big cap stocks in the middle of reporting season. Joining me is Geoff Wilson from Wilson Asset Management and John Abernethy from Clime Investment Management.
That's right.
John, we'll kick it off with you. Telstra.
Oh, Telstra's a strong hold. I mean, the yield sustains it. The result was reasonable. Didn't knock it out of the park. A little bit disappointed about the DRP after having a buyback, but that's what investment banks tell companies to do these days. But apart from that, I've got a strong hold on it, looking to buy it close to $6.
Okay, Geoff, what about you, Telstra?
Yeah, very short term, I'm a buy. Medium term, I'm a hold. Long term, I'm a sell on Telstra.
Bit of everything.
Well, I mean, it's rallying on the back of interest rates, and I expect there'll be more cuts in interest rates in Australia. They're one of the most expensive telcos in the world.
Okay.
And that's buy, hold, sell at the same price, isn't it, Geoff?
I know you like an upgrade. Macquarie's in the upgrade cycle.
Yes. Yeah, buy Macquarie. And it is in the upgrade cycle, and we've seen a couple. To me, it's the cheapest of the banks in Australia. On a multiple of say 13 times, growing at 35%. So it's definitely a buy.
Okay, John.
Yeah, well, I don't think it'll grow at 35% for very long, but its earnings recovery is good. The return on equity is coming back to around 14-15%. Can it get to 2 times book, which it's getting close to? I don't think so, but $70. Momentum behind it, yep, you can hold it.
Okay. Domino's Pizza really shot the lights out with its result?
Yeah, look, incredibly good result, incredibly good, and I think hats off to the management, and they'll probably replicate that, what they've done in Australia and Japan, so that's why the market's gone crazy. But looking at the numbers, its market cap, I think, is getting close to about $5 billion, $3 billion on it, and it's estimated 60 million earnings. If its earnings doubled and doubled again, it'd still be on a multiple of about 15, 16 times, and that's not going to happen anytime this decade. So it's off the planet, probably a sell.
Yeah, I'm a sell. Good business, incredibly well managed. As John said, I take my hat off to what management have achieved, and for an Australian company, incredibly impressive, but just too expensive. Okay.
Last one today, a fund manager, Magellan Financial, one you should understand quite well.
Yeah, pity we didn't buy more shares at 60 cents. Anyway.
Pity you didn't hold them.
When we sold them at $8. Yeah. That's right, trading around the $20 mark. Again, Chris Mackay and Hamish have done a fantastic job there growing the business. I'm more a hold because I just think it's not cheap. But if you believe the equity market will go higher, which we're talking about, it probably will in the short term, it is fund managers are leverage plays on the equity market. So you could even be a short-term buy.
Okay, John, Magellan?
Oh, momentum's fantastic. I mean, still the Australian investment market in terms of super is underinvested offshore. I reckon it can double from here in the next 2 or 3 years in terms of flows. So that's very, very positive.
Is that Magellan's share price?
No, I think the flows, whether Magellan gets it, I don't know. What Magellan has shown is how incompetent the Australian banks are. Now, all the Australian banks should have set up in-house foreign investment businesses, and none of them did. And so Magellan's done it, and the banks are distributing their product. That is one of the most amazing stories of financial advisors not advising banks what to do and doing it themselves. So hats off to Magellan. I think you could almost buy it.
Okay, there you go. Some good quality companies with some good results and a bit of momentum.